You guys are welcome. So if you can see me, please kindly signify from the chat box so I can know that you guys can hear me. Please, if you can hear me, let me know from the chat box. Okay, good. Thank you all for coming around. My name is Aminu, popularly known by a priest in the crypto space. So today I'll be teaching you guys the very basics of cryptocurrency, blockchain, and Bitcoin. Then, if time permits us, I'm going to run you guys through how people are making money in the cryptocurrency space. So, I prepared a material for us. So, I will be presenting a slides for you guys. Okay, so I want to know if you guys can see my screen. To know if you can see my screen. So if you can hear me, kindly signify so I can start. And if you can see my screen, let me know. If you can see my screen, let me know. Okay.
Can't see the screen, but we can hear perfectly.
Okay. So good evening, everybody. My name is Aminu, popularly known by El Priest in the crypto space. I'll just give you a briefing about my personal background. I started crypto in the late 2016. I was referred by a friend. I started actually through Ponzi, then I became interested about it. So I had to learn about what this new innovation is. So since then, I've been in the space. I've been going on and off. So I came in fully 2018. So since then, I've worked for lots of projects in the crypto space. I'm currently working for Binance. Binance is a cryptocurrency exchange. I've worked for Atomic Wallets. I've worked for several crypto companies and projects. Then I'm also a crypto trader. I trade cryptocurrency, both OTC and the normal sports and futures trading. So today I'm going to run you guys through the fundamentals of cryptocurrency, Bitcoin, and blockchain. So let's start. Okay, so this is like a brief introduction about myself. I think I've said enough, so let's start. So I'll start with explaining what money is to you guys. Then if you can grab what money is, it should be very easy to grasp what cryptocurrency is. So because there's a kind of relationship between the two entities. So I'll be relating those two through my class. So firstly, what is money? Money is a tool to exchange value. Any object can also be used as money. And most importantly, money is a shared belief. So a simple explanation of what this is like money can be anything. Money can be anything at all. Money can be student, paper, can be a bio, can be pencil, can be anything at all, provided that there is a shared input of the receiver and the giver. So what I mean by this is a 500 naira note is just a 500 naira note if I don't associate value to it. So it's just like if I'm holding a 500 naira note and I'm not associating value to it, the 500 naira note is just a paper, nothing more. It's just a paper. So the reason why I use 500 naira note to buy commodities is because other people believe the 500 naira note is valuable enough to buy that commodity. So that's what I mean by shared belief. I can't believe in 500 naira alone. That's shared belief between a society, a community of people. A has to believe in notes. B has to believe in 500 naira notes. So that is about money. And like I said, any object can be used as money, provided that value is associated to it. So what is most of you guys have been hearing fiat money. If you are familiar with the crypto space already, you would have been hearing fiat money. So fiat money is simply a government, like for example, we have naira in Nigeria, we have the pounds in the UK, then we have euros in the Europe, we have the American dollars. We have several fiat currencies are government issued currencies. So they are those legal tenders that replaced other commodities that were used in those days. In those days, people spend cowries, people spend rocks, sticks, or people do trade by barter. So as time evolves, things changed. So now government decide that okay, we can issue this this legal tender with shared belief in the community, in the society, with the value associated to it. People can actually spend the paper money as an exchange of value. You understand? So the reason why is more portable to use. Nobody is going around carrying a bag of coin, like in those days when there were coins, there were goods. So these paper money are portable, they are easy to use, but they have disadvantages. They are not scarce. So what I mean by they are not scarce is they are prone to inflation. And they said anything that is readily available loses value drastically. So automatically, fiat money doesn't have intrinsic value. So let's move to cryptocurrencies. So what are cryptocurrencies? So like we have the paper money, cryptocurrencies are digital form of money. So it's just like saying offline and online. The digital form of money, layman English, online money. But cryptocurrency cannot just be associated to money alone. It's you can't just associate cryptocurrency to money alone. It comes with lots of things, lots of things. So its properties it is protected by cryptography, unlike the normal fiat paper money, and cannot be duplicated. What I mean by this is, let me take the paper money, naira, for example. 1,000 naira notes as fake and the original version of it. Somebody somewhere can just wake up one day, get the tools he needs and print out fake 1,000 naira notes and spend without getting caught or something like that. So this is not possible with cryptocurrencies. Why? Because it exists on a technology called blockchain. We'll get to that and I will explain how it's related. So cryptocurrencies are distributed, that is, they are distributed in a P2P network, in a peer-to-peer network. That's why I'm here and somebody is in Lagos or Abuja, I can simply send my cryptocurrency from here to Abuja without involving any third party, without involving a bank, without involving anybody. It's just me pushing my currencies to somebody in Lagos or Abuja. And that's what I mean by borderless. There is nothing like, okay, you are going to Iran now. You can't spend your naira in Iran. So your naira stays in Nigeria. That doesn't work like that with cryptocurrencies. It is borderless. You can spend it anywhere in the world. It can go anywhere in the world. Okay, so what is Bitcoin? So I have explained what cryptocurrency is. So Bitcoin is actually a cryptocurrency. So any property associated to cryptocurrency can be associated to Bitcoin as well. So the reason why Bitcoin stands out is because it is the first cryptocurrency. It is transparent, scarce, open source, and censorship resistant. So what I mean by transparent is I mentioned something like the technology that governs these cryptocurrencies, which is blockchain. Blockchain is a distributed ledger, and what this means is that any transaction, any occurrence whatsoever happening on a blockchain can be viewed by anybody, anywhere in the world, anytime. So there's transparency. So let me say, if I am sending 10 Bitcoin from myself to maybe somebody else in this meeting now, somebody somewhere can go to the blockchain, check the transaction, check the amount I'm sending, and even check the transaction fees. You can get all the information about the transaction. So that's what they say. That's what they mean by transparency. Everything happening on the blockchain can be viewed by anybody from anywhere in the world. So this Bitcoin as a cryptocurrency is scarce. So what I mean by scarce is it has limited supply. Bitcoin has only 21 million pieces. So let me put it this way. Bitcoin has only 21 million pieces. Let's say everybody in the whole world is to get a share of the Bitcoin supply. That would be 7 billion citizens sharing 21 million Bitcoin. Let me do the calculation. 7 billion divided by 21 million. So at least each and every one of us will be getting, we not even get up to 0.01 Bitcoin. For you to imagine how scarce the BTC is. So supply and demand, the rule of supply and demand comes in. Anything that is scarce will definitely be expensive. Anything that is hard to get will definitely be expensive. That is why Bitcoin is considered a store of value. Demand is increasing every day. Upon the scarce supply, Bitcoin is deflationary. Bitcoin is not prone to inflation because there can only be 21 million Bitcoin for life. There can only be 21 million Bitcoin for life. So the next property is open source. What this means is that anybody can come and contribute to the Bitcoin network. Okay, these are deep tech parts, the techie part of the whole innovation. Anybody can come and contribute to the Bitcoin network. So it's open source, open to everybody, and it is censorship resistant. That is, nobody is controlling it. Nobody can ban it. Nobody can stop it. It's censorship resistant. So who created Bitcoin? Bitcoin was created by a pseudonymous scientist. He's popularly known as Satoshi Nakamoto. But some people believe that this Satoshi Nakamoto is not like a person, like an individual, possibly a group of people, but call themselves Satoshi Nakamoto. So this guy was trying to find a brilliant solution to the double spend problem of the underlying fiat currency, the underlying traditional financial system. So what I mean by what it means by double spending problem is the fact that um I have one Bitcoin and I am transferring one Bitcoin to maybe Jacob or Tunde or anybody around the world. Once the one Bitcoin leaves my account, leaves my wallet, I don't have the one Bitcoin again. I can't spend that one Bitcoin twice. I can't spend one Bitcoin twice. Why? Because there's a record of it in blockchain. So Bitcoin is crazy. The thing is, there is no physical form of Bitcoin. These are just numbers. But these numbers are calculated in such a way that there's a record of it. Once you have one Bitcoin in your wallet and you send out half of it, that's 0.5 Bitcoin. There is a record of it. It's recorded on a blockchain that 0.5 Bitcoin has been sent out from your wallet. So automatically you can't respend that 0.5 Bitcoin. So which is a problem that is existing on the underlying fiat currency. There's a very big double spend problem with the fiat currency. Okay, so I have been mentioning blockchain since, so I'm going to dive into blockchain now. I will give you a brief explanation of it because I can't go deeply into it so as not to get anybody confused. But please, before I continue, I would like to know if you guys can hear me. So if you can hear me, just say I. Let me know. Okay.
Hi, I can hear you.
Hi. Hi, I can hear you.
Hi, I can hear you.
I can hear you.
Hi, I can hear you.
Let me continue.
Hi, I can hear you.
So what is blockchain? Blockchain, in a simple form, blockchain is a record book. It's beyond that, but that's the only way I can explain it to you guys, and you can grab it as quick as possible. Blockchain is like a record book, but it's a distributed ledger, like a database. So it means I can contribute to it, Jacob can contribute to it, Tunde can contribute to it, anybody around the world can contribute to it, and it is transparent. Whatever I'm contributing to the blockchain, Jacob can see it, Tunde can see it. So there's transparency. So the way this blockchain works is let's say for example, okay, before I get to that, anything can be stored on a blockchain, be it money, documents, anything whatsoever. So far the thing you want to store on the blockchain can be digitized, so automatically it can be stored on a blockchain. So blockchain is not just for the storage of just taking records of just transaction alone. Anything can be stored on a blockchain. So I don't know if anybody here is already familiar with the space already. You might have been hearing NFTs. They are called non-fungible tokens. So these non-fungible tokens is a way of storing digital arts on blockchains. So to avoid identity theft and maybe compromising on stuff like that, just like, let me take for example the portrait of Mona Lisa can be digitized, can be stored on a blockchain with the signature of whoever owns that particular digital art, which is the Mona Lisa's portrait. So You know, I know the portrait is kept in probably a museum somewhere, and it's prone to theft. It's prone to duplication. Someone can just duplicate it and sell it or something like that. But this is not possible if the record is on the blockchain. So if the art is moving from A to B, it's moving from A to B. Anybody around the world can see that the art, the Mona Lisa's portrait, is moving from A's custody to B's custody. So blockchain is a tamper-proof system. You can't tamper it. So this technology is very, very amazing. You can't limit yourself to whatever I'm going to give you now, because I'm trying to just like pick from the simplest. I'm just trying to explain it in the simplest way so that you guys can just understand the general knowledge of it. So it's a chain of linked blocks. I'll get to that, and it's a special type of ledger. So this is how blockchain works. There is what we call let me use the Bitcoin transaction to explain this. I want to send one Bitcoin to Oladimeji or to Tunde or to just anybody. So from my wallet, I'll send the Bitcoin. I'll get the other person's wallet address, send the Bitcoin. So this is how the thing happens. There are people who call miners. So these miners are those that facilitate these transactions. Then keep the record of it on the blockchain. So this is how it is. A is transferring one Bitcoin to B. So once you initiate the transaction, miners will compete to solve mathematical problem. So the first to solve the problem will facilitate the transaction, will take record of it, will verify it, will give it a hash. An hash is the identity, that is like transaction ID. It will give it an hash, then put it in the block that is already in the current block. I don't know, that's where the word comes from, the word blockchain. So it's more like a chain of block, keeping records of these transactions, document or anything, keeping records of these stuff. All these things are linked. So it's not possible for you to jump. If you are checking the records, it's not possible for you to like jump from this block to this block. So everything is linked together on the record. So the participants don't need to trust each other. Everyone keep tracks of the balance and transaction. So what happens if someone tries to cheat the system? Okay, the only way someone can cheat the system is there's what we call 51% attack. If 51% of the miners agree to do the same thing at the same time, which will cost a lot of energy and funds to run something like that, because these nodes are distributed around the globe. I can decide to own a node now for mining Bitcoin. So if I'm mining Bitcoin, I am participating in the blockchain, in the Bitcoin network as a facilitator, as a miner, because I own a node. So I can compete with other miners in facilitating transactions like that. So Bitcoin versus blockchain, these are two different things. Some people even confuse Bitcoin to blockchain, and some people even think blockchain is just a wallet. Please, whoever is thinking blockchain is just a wallet should debunk thoughts like that. So I've explained what blockchain is: a distributed database, takes records of information, any kind of digital data whatsoever. So Bitcoin is a digital form of currency. And please take note, we have several cryptocurrencies. We have thousands of them. We'll get to that. So Bitcoin is a financial asset. Just like we have silver, we have gold, then we have the fiat currencies. They are tradable. you can trade Bitcoin. So it is the first and the most popular cryptocurrency. It is a computer software. It uses open source. I've explained this. That is, anybody can come and contribute in the Bitcoin network. So it is public and decentralized. Decentralized in the sense that there is no central company controlling Bitcoin. The people controlling Bitcoin, they are not actually controlling Bitcoin. They are just facilitators. They are the miners, and they are scattered around the globe. It's not like there's a particular company where you go to, like, this is the Bitcoin company. No, it doesn't work like that. So it is decentralized. Nobody is controlling Bitcoin. Nobody has control over Bitcoin. That is why it is very, very difficult for the government to stop this innovation. They can't stop Bitcoin. The only way they can stop Bitcoin is for them to halt all the nodes around the world. And there are thousands or millions of nodes around the world. So it's not possible. So this is a movement the government cannot stop. It is censorship resistant, cannot be censored by anybody. So Bitcoin and fiat currencies, okay, this is just like a comparison between Bitcoin and fiat currencies. Fiat currencies are centralized, they are controlled by government. Government can do anything with the money. Government can decide to take any amount, use it for anything they like, unquestionably. So this cannot work with Bitcoin. So fiat currencies are not scarce. They have unlimited supply. I don't know if you guys are following the are following news very well. There was a time during the pandemic, I know most of you have heard of governments around the world printing more and more currencies, which is rendering their currencies, which is devaluing their currencies. You know, the more available the currency is, the lesser its value. If you go to places like, I think, Venezuela, Zimbabwe, I think I saw a post one time like that where they say a basket full of money, and they were like, the basket is more expensive than the money in the basket. You can imagine how devalued the currency is. And same thing is happening to the Nigerian currency now. Every day the currency is devaluing. I think presently now we have $1 costs, I think, 520 naira. You can see how useless the naira is becoming. So people are gradually moving their funds into cryptocurrency because cryptocurrencies are great store of value. You know, they are deflationary, they are not prone to inflation, and they increase in value over time. So um cryptocurrencies, they are fast, they are cheap, they are censorship resistant. I've explained all this, and their transactions are irreversible. If I send one Bitcoin to Jacob, the transactions are irreversible. I can't reverse the transaction because the record is already in the blockchain that I have sent one Bitcoin to Jacob. So they are irreversible. So I think this is just an illustration of how the Bitcoin, the blockchain transfer works. You know, this is Alice sending money to Bob. So it has to go into the blockchain. The miners take it up, they verify it, they verify that Alice is actually sending $200 to Bob. They give it an identity which is called hash. Then the 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 money is delivered to Bob, and the miners take the fee. So this fee is for facilitating the transaction. So as you can see, on January 16, someone paid $0.49 in fees to move over $1 billion in a single Bitcoin transaction. So this link here can take us to the transaction. Let me show you guys. See, this is what it looks like. That's it, January 16, 2020. Someone sent over $1 billion. Let me see. Where's the transaction fee? Transaction fee. Where is the transaction fee? Transaction fee. See the fees. This is the fee. Let me see if I can change the currency to USD. Good. This is the transaction fee. As at that time, the transaction fee was worth 0.49 cents. That's just 49 cents. So let's continue. Let's continue. Let's continue. Let's continue. Sorry. Okay. So cryptocurrency wallets. So cryptocurrency wallets are tools that are used to interact with blockchain network. Let me break it down for you guys. So same way we have bank accounts in our local banks, we have cryptocurrency wallets too. So a simple explanation is, wait, please, if you can hear me, kindly signify. You know, be like I just talk to myself.
Can
If you
hear
can
you.
hear me, just signify.
I can hear you.
I can hear you.
Good.
I can hear you.
So cryptocurrency wallet can be used to store cryptos, but that is not the only function of cryptocurrency wallets. Cryptocurrency wallets also function as a tool that is used to interact with blockchain networks. So this is what I mean by interaction. I mentioned earlier that if A is sending Bitcoin to B, it goes into the blockchain. The transaction is taken up, verified, given an identity, then added to block of transaction that is already on the blockchain before it goes to the other person. So all this happens through a cryptocurrency wallet. They happen through a cryptocurrency wallet. So we have different kinds of wallets. We have software wallets, we have web wallets, desktop, mobile, hardware wallets. But all these wallets are divided into two. We have hot wallets and cold wallets. So these categories are like hot wallets are this involves probably software, mobile app that just involves like you using it online, probably operating phone or something like that. Then the cold wallets, they are hardware wallets, they are edible wallets, they are more like flash drives. So they are. Then we have paper wallets too. Paper wallets is more like just paper. So the only thing you need to write on the paper is your private key, which is the keys you need to like access your funds or anything. So the categories of these hot wallets are software, can be web wallets. Web wallets can be accessed through websites or through the web generally. Then we have desktop wallets, which can be Windows, Mac, or then we have mobile wallets. These are wallets that can be operated through your mobile phone. Then I have explained the hardware and the paper wallets. So uses of blockchain, they can work well in remittance, supply chain, and healthcare. So remittance is just sending money from here and there. That's the simple way to explain remittance. So blockchain is a use case because it's a good use case because the transactions are transparent, they are decentralized, nobody is controlling it. Everybody can view and see that okay, A is transferring so amount of money to B. So let's say the Nigerian government adopts cryptocurrencies now, or the blockchain technology, and they are preparing the budget. Normally now they just come, they read the budget to the house. Okay, we are spending 2 trillion this year, blah blah blah. These are just words of the mouth. They cannot be verified. But if blockchain technology is adopted, all this will be in records. Okay, the Buhari government is spending 1.9 trillion on 2021 budget. Everything is visible on the blockchain. Anybody around the world can come and see that, okay, this is where this is where 200 million is going, this is where 300 million is going. It can be seen by anybody around the world. So I don't know, something happened on Twitter recently about this feminist call, about how the Bitcoin was donated, and some people were like saying the Bitcoin took months to deliver and something like that. All these things can be seen on the blockchain. There are records of it. So the only way you can cheat someone with these technologies, if the person is ignorant of it, if the person doesn't know anything about it. So they can work as supply chain like storage of informations, data, and stuff like this. Same thing with healthcare. Hospitals can use blockchain tech for storing data and any other thing. Other use cases are charity, just like I mentioned, the feminist code that happened during the NSAS stuff, then decentralized finance. This is another um big ecosystem in the crypto space, this particular decentralized finance. So if this relationship is going to last longer than this, I will put you guys through all these things. But I know I have a very busy schedule, so you guys will bear with me. I can't guarantee sharp trainings, but I'm ready to teach you guys and take you guys to any level you want to take this to. So the apps are decentralized applications that are not controlled by anybody. So other use cases are gaming, governance, identity management, and Internet of Things. So all these listed use cases are other subtopics that we can't even treat today. So I think remittance, the worldwide transfer of money, blah blah blah, lower fees, faster transaction. So I think I explained supply chain, where products and services are rendered through blockchain, something like that. So blockchain is tamper-proof, it's customizable, secure, and transparent. No intermediaries. It's just you and me, peer to peer. So hence less fraud, reduce labor. So let's say if I want to transfer $200 to someone in Europe today, I have to go to the bank, I submit documents, provide ID cards, do this, do that. Bank will stress me because I'll take they waste my time. But from the comfort of my bed, from my phone, I can just send $200 worth of Bitcoin to someone in Europe, and it will be delivered in less than 1 minute. Depends on the transaction speed at that particular moment. Depends on how fast the transaction is processed, and depends on blockchain again. We have faster blockchain networks now because the current Bitcoin network operates on a proof of work protocol. So the innovation is getting bigger day by day. So we have new blockchain protocols like POS, proof of stake, the delegated proof of stake, and these are faster blockchain with faster and more cheaper transactions. So healthcare like that. So this is just the DeFi I mentioned, the decentralized finance I mentioned earlier. This is just an overview of what it is. DEXs are decentralized exchange. So decentralized exchange are exchanges that that are not controlled by anybody. Anywhere or anytime you hear the word decentralized, these are something and these are things or things that are not controlled by anybody, no central body, no company controlling this. So it's just you interacting with the blockchain, just you, no third party, nothing. So other DeFi types, we have lending, we have borrowing. I can't treat all this today. So the benefits are, these are some of its benefits: global access, they are private and permissionless. You don't need anybody's permission to use it. They are custody free and you don't need KYC. Custody free in the sense that nobody is in control. You are the one controlling your own funds and where and how your funds go out. So these are some of the issues with the decentralized finance. Okay, so Binance. Let me talk about Binance to you guys. So I am actually working for Binance as a campus ambassador representing Ahmadu Bello University, Zaria. So Binance is the world's leading blockchain and cryptocurrency infrastructure provider. So what this means is that anybody that hears Binance always think, okay, Binance is where you go, is your go-to platform to trade cryptocurrencies. So Binance is beyond that. So the exchange part of it is just like a section of the Binance ecosystem. We have Binance Smart Chain, we have Binance Charity, we have Binance Academy, we have other sections of Binance ecosystem. So let's say Binance is just like a general name of the ecosystem. So they are providing infrastructure and cryptocurrency infrastructures for everybody. So they are trusted by millions. Like I said, it's the world's leading cryptocurrency exchange, the world leading, that is the number one cryptocurrency exchange in the whole world. So their main aim is dedicated to increasing freedom of money. That is, they are bringing freedom of money to you. Their products are easy to use and easy to grab. So other features are unmatched portfolios of cryptos, products and offerings. So this is the Binance website here, which is the cryptocurrency exchange. So this is the Binance vision. So these are some of the statistics from Binance. When it was launched, it went from 0 to number 1 within 5 months in trading volume. So Binance is global. We have users from 180 plus countries and regions, team members 40 plus, then interface in 15 different languages. So this is the and this is an infographics illustrating the Binance ecosystem. Okay, as you can see, we have Fiat Gateway. So presently, the Fiat Gateway is still, I don't know, the government of Nigeria has banned the withdrawal and deposit of cryptocurrencies through bank accounts. Because originally, if you are using Binance, you can easily deposit your Naira into Binance, change the Naira to Bitcoin, and you can as well sell the Bitcoin on Binance and get your Naira and withdraw your Naira directly into your bank account without issue, seamlessly. So, but for now, it is on hold. But the Fiat Gateway works for other countries. Like, as you can see, these are some of the countries it's working for. This, it's right here. Then we have OTC, over the counter trade. Then we have P2P, peer to peer. We have spot and margin trading. We have futures and options trading. We have Binance savings, staking, mining pool. I don't know. Don't get confused or twisted. Don't get these things twisted. Little by little, you grab it. These are simple steps. So you don't have to limit yourself to what I'm teaching today, but I will always be around in the group to answer questions and stuff like that. So Binance has the lowest fees compared to other exchanges, fast transactions, both deposit and withdrawal are very convenient. Okay. don't think I need to explain this. So that is all about the basics of cryptocurrency, Bitcoin, and blockchain. So I will take questions now. So you guys can ask me questions through your through the chat box. Okay, you can ask questions now. I think there is still time. We I can use 30 minutes to rush through cryptocurrency trading. Okay, please ask questions through the chat box. And if you don't have questions, I can just continue. Please type your question, or if you can unmute yourself and talk.
Okay.
Hello, good
Good evening,
afternoon.
sir.
My name is Thank you for the lecture. Now, I want to ask a question.
Okay, someone said, how is deposit and withdrawal now done in Nigeria? So presently, the government cannot stop me and you from sending Bitcoin to one another. So people just buy peer to peer. So there are vendors, they are what are they called? They are P2P traders. You can just meet one of them, and the P2P feature is even available on Binance. You go to Binance, you locate the P2P, you look for vendors with very good rates. You buy you buy from them or you sell to them. So for now, both deposit and withdrawal of naira is not working for now. So what's the best crypto to buy for starters? These are questions that are always scary for me. I don't advise starters that don't know anything about Bitcoin, about it, to just invest in. You don't just jump into what you don't know. So that is why we are here. I'll teach you what this thing is. Then on your own, you know what to buy.
Never take action.
Okay. So for starter, then someone said, so you said BTC has only 21 million BTC. Does that mean BTC won't last? No, that doesn't mean BTC won't last. This means that there can only be 21 million Bitcoin in circulation. So let me use. I'm trying to find a very good example. Let's say Bugatti makes a new car now. Then Bugatti says this is a limited edition. So there can only be four of these Bugatti in the whole world. So automatically, this Bugatti can be owned by 4 people in the whole world. But it's not like these 4 Bugattis are going extinct if Bugatti sells out the whole 4. So if I buy the Bugatti, I can still sell the Bugatti to somebody else. So automatically, there can only be 21 million in circulation. That doesn't mean you cannot buy from somebody who already owns the Bitcoin. So that doesn't mean Bitcoin will not last. Then, apart from leaving your Bitcoin to rise, are there other ways? There are several ways to make profit. Money full this space. So now settle down, learn this thing. Money choke. How does Binance work? Is it like one will have to? Yes, you have to open an account there. Binance can serve as wallets, and you can trade your cryptocurrencies on Binance. Okay. Then any more questions? Any more questions? Any more questions? Okay, so let me run you guys through how to make money in crypto. I'll just a brief overview of how it works. So this is a secret nobody will tell you guys, or probably they will have to charge you money to tell you these things I'm about to tell you guys now. So the way this crypto space is, any new person that is coming in feels the only way you can make money from crypto is when you buy Bitcoin, then you keep it in your wallet, then you wait till then you wait till it surges in value so that you can sell. So actually, it's beyond that. You can actually trade cryptocurrencies. So how do you make money from cryptocurrencies? By trading them, right? So how does trading work? You buy low, you sell high. Just like you buy at a cheaper price, sell at an expensive price. So this is just a simple explanation of cryptocurrency trading. So let's leave trading aside. Other ways you can make money, there's what we call savings, there's staking, there's lending, there's borrowing. So these are several ways where you can delegate your funds to and get passive rewards for it. So another way is jobs. You can work for crypto companies as in any form of way. So far you have a skill, you have a skill to render, you have a value to give. So there are several ways. So we can't treat that today. Uh, I have a slide on crypto trading. So I'll just rush that one for you guys now. I'm coming. I'll just rush that one for you guys. Crypto trading. Coming, I'm still with you. I'm trying to load this slide.
Good evening, sir. Sorry for intruding. I don't know if you can hear me.
Still loading. Okay, I think it's open. So I'll be sharing my screen now. Please, if you can still hear me, please say yes. If you can still hear
Yes.
me, please say yes.
Yes, yes.
Can you guys hear me?
Yes,
Please
sir.
say
Yes,
yes.
yes, yes.
Yeah, we
Yes,
can
sir.
hear you. Even though
Hello.
you don't answer our question.
Can you guys hear me?
Yeah.
Yes, we can. We can.
Yeah, I can hear you.
Nobody's responding.
We are with you. We
Yes.
can hear you.
I know
Okay.
you
We can
hear.
hear you.
So let's go to crypto trading now.
We can hear you.
I'll be sharing my screen now. Okay, good. Can you guys see my screen? Just say yes if you can see my screen.
Yes.
Yes.
Okay.
Yes.
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 Okay. So what is trading? So trading simply refers to the buying and selling of assets. So all these ones are big grammars. When you buy groceries from local shop, that's a trade. When you buy anything, that's a trade. As far as um involves buying, it involves a buyer and a seller. So to cut the story short, the simple principle behind trading is taking advantage of spread. Spread means the difference between the buy price and the sell price. So the difference between the buy price and the sell price is your own profit. So this is how it works. If I buy bread for 60 naira, then I'm selling the bread for 80 naira. I've made a profit of 20 naira. So let's say let me see. I'm looking for something I can use. That's just the basic thing about it. Buying and selling of digital assets which are these cryptocurrencies. Taking advantage of the spread, which is the difference between the buy price and the sell price. And the principle is buy it cheap and sell it at an expensive price. Buy low, sell high. It's as simple as that. So, like I mentioned earlier, Binance is a cryptocurrency exchange. This exchange is a market where this buying and selling happens. So people go to Binance. So Binance is a go-to area for your buying and your selling. So anybody that wants to start cryptocurrency trading has to set up an account on Binance so that you can buy and sell these cryptocurrency assets. Okay. So there are several parts of the Binance exchange that you need to understand before you can start trading these cryptocurrencies. Examples are market pairs, then other types. So what is a market and what is a market pair? So when we talk about a specific market, we mean that the place where buyers and sellers come together to trade assets. So automatically, Binance is a market because it's a go-to area for both buyer and seller to trade their assets. So market pair means what we are buying and selling. So what are we buying and what are we paying with? What are you buying and what are you going to use to pay for what you are buying? That's the simplest form of explaining the market pair. So this is how it works. You go to the market today, you want to buy 1 mudu of rice. Rice is what you are buying. The 1,000 naira note is what you are paying to buy the 1 mudu of rice. I think it's explanatory like that. So market pair is what you are buying and what you are selling. So this is what market pair looks like. BTC stroke ZAR. This is South African rand. So if I go to Binance now, I have my South African rand. I want to use it to buy Bitcoin. So Bitcoin is the commodity I'm buying. Then this ZAR is what I'm going to pay to buy the BTC. I think it's literally like that. This first currency here is what I'm buying. Then this one is what I'm paying to buy this. Very simple. So same thing goes with other pairs you find on these exchanges. So the market pair indicates that if I want to buy Bitcoin, I have to pay with then the ETH, blah blah blah. As simple as that. So on the exchange, we have different order types. So order means you placing order for either buying or selling. So the first order type and the most common one is this limit order. So limit order is an order type that is like you are commanding the exchange, like you are bargaining at a particular price. You are bargaining at a particular price. Like it's just like going to the market, saying this 1 mudu of rice, I'm buying it at 1,000 naira per mudu. Either it costs 1,200 naira at the time you are going to the market, or maybe it will later cost 900 naira later. But this is your own bargained price. You are buying at 1,000 naira. If it's not 1,000 naira, you are not buying. So either the price of rice fluctuates up or down, we are still buying at that 1,000 naira. So if I open my exchange app now, then I want to buy BTC, then I'm going to use a limit order. I'll just place the order. I'm buying BTC at $58,000. So either BTC goes to $59,000 or it goes to $57,000. My order will still be there until it touches that $58,000. So that is when my order will be filled. So it's like a bargain price. So the second one is market order. Market order is like an order to buy or sell at the best available rate in the market. So the exchange will automatically match you with the best available rate in the market. So I'm going in and I'm telling the exchange I'm buying at market order. The best available rate at that moment is I'll get the commodity at that available rate. So then we have the stop loss order. So this stop loss order works like this. It's just like saying I want to buy bread at 16 naira bar, but probably I'm not available in the market. So I'll be like, if the price of bread touches 55 naira, I'm commanding the exchange to place an order for me at 60 naira. So automatically you placing an order like this is like you believe if the price of bread touches 55 naira, it will definitely go to 60 naira. So you are commanding the exchange to buy the bread for 60 naira if the price ever touches 55 naira. So that's how the stop loss order works. Then trading 101. So we have technical and fundamental analysis. So this analysis is just like so people like a guy just asked me the other time, like, what can you buy as a starter? So I can't possibly give you what to buy because I don't do that. I don't give people financial advice. So if you want to know how to buy, when to, and what to buy, you need to do analysis, which is technical and fundamental analysis. So after this analysis, you can jump into a conclusion that this asset will go up or to go down. So technical analysis is using price history, patterns, trends that emerge to make your predictions. So you look at previous price history, what has happened in the past, the patterns, the charts, to predict what you think will happen in the future. So these are charts we always see, like multiple lines, all those green and red lines. I don't know if you are familiar with traders, you see all those line charts. So this is what people read, and it's called technical analysis. Then we have fundamental analysis. So this analysis is looking at the underlying factors that can affect an asset's value. Let's take Facebook stocks, for example. So when Mark created Facebook, I can't remember when he created Facebook, but as a trader or an investor, if I feel Facebook will go a long way, or Facebook will be as big as it is today, I can invest in Facebook then. Why? Because I think the assets we go up because of the solutions it's providing. You understand? I just feel like, okay, this with things I'm seeing about this particular asset, Facebook, more people are signing up every day, getting more adoption and visibilities, and the team are working on more updates and stuff like that. So all these things, I can use all these things to determine that no, these assets will grow in value subsequently. So this can make me buy the assets. So these are fundamental analysis. So for Bitcoin, this includes number of address, hash rate, and trading volume and stuff like that. So using technical analysis, so the main tools are candlesticks, support and resistance, then some common technical analysis indicators and how to use them. So the first is candlesticks. So this is what candlesticks looks like. This. So this is what candlesticks look like, and they are made up of 4 data points. They tell you the price, how the price is reacting to the market. So the confirmation comes like this. They have the open, the high, the low, and the close. So I don't know. I don't think there is. Okay. So the open, high, low, and close. The open. I know if you explain the candlesticks like this. I need. Okay, let me just explain it. I don't know if you guys will get it. So let's take this particular candlestick, for example, this red one. So I'll tell you the parts of those candlesticks. This up here, this tip here is called, for the red candles, this is the open price. Abi the high, and this is the low. This right here, this top of the red body is the open price, and down here is the close price, and it is opposite of that in the green candles. I don't know this. I'll just give you an overview of this. I can't possibly teach these candlesticks using just this. Okay, but candlestick telling you what is happening in the market, the open price, the close price, the highest price, and the lowest price at a particular time frame. So that is how it works. Then trend lines. These are called trend lines. They are used by almost every traders. So they are lines that connect certain data points on a chart. So typically this data is the price, but not in all cases. So these trend lines are mostly region, and you can see these regions, most time prices react to these regions. As you can see, the price was going, then at this point it bounced up, then it was consolidating, then started going down, but at this point again it bounced up. So most time prices in the market react to these regions on the chart. So it's very easy to locate, it's very easy to draw these lines. It's just for you to locate these regions in the market, in the chart, on the chart, then draw a line across it, then draw a line across it to visualize the reaction of prices in the market to this very region. So as you can see, anytime the price touches this region, it bounces back up. So that is how trend line works. So the use of this trend line is to know the overall trend of the market, to know whether the market is going up or is going down. So as for this one, as you can see, the market is trending up, because anytime the market goes up and comes down, it makes a higher low. Higher low means it doesn't come back to the lowest price it has made before. It comes back down, but it's not, the price will not be as low as it was before. So it's making a higher low in the market. So support and resistance. Support and resistance are horizontal forms of trend lines. So these are lines too, but not just lines, but regions in the chart. So resistance means a level where the price finds a ceiling. So resistance is like a top level where the price gets to, then comes down. Then support is a point where the price gets to, then bounce up. As you can see here from this diagram, this is a resistance, this is a support. So it's as easy as drawing a line across this region. Then you know anytime the price touches this point, it comes back down. Then anytime it touches this point, it goes back up. It's as simple as that. So they are basically support supply and demand zone. Supply and demand zone in the sense that this support is a demand zone, because anytime the price hits this region, there are demand, there are much demand, and you know demand and supply. Demand pushes the price up, and you know supply region is where people start selling off their assets. So everybody reacts to the same thing in the market, because everybody is looking at the same chart, everybody is drawing the same line. So automatically, if I buy a commodity here, then I have my support and resistance line in place, then I know that when the price touches this supply zone, automatically it will go up. So Jacob, that is also looking at this same chart, knows that when the price hits this point, it definitely goes down. So automatically, when the price hits this point, everybody sells off. They sell off. Then the price goes back down. Then they are already waiting for this supply zone, demand zone, to buy back again. Because once it touches this point, it goes back up. It's as simple as that. So common technical analysis indicators, we have RSI, relative strength index. It tells if the market have been overbought or oversold. So we have moving averages. This moving averages is smooth out price action and make it easier to spot market trends. This one also works like trend line, but more flexible than trend lines. So they move based on previous price data. Understand? So they are lagging. They are lagging indicators because they don't react early to price action. So these are this is Bollinger bands. It has upper band, lower band, and the middle band. There's a way these Bollinger bands react to the people to price actions too, whereby it contracts and expands like that. So scalping is like a form of trade. So it takes place across small time frame. Scalpers are those that are coming to the market to just buy and sell and take profit immediately. So they take advantage of small price fluctuation. Like for example, BTC is $53,000 now. Then they buy in. Then the moment BTC goes to $53,200, they sell. So they have made $200 profit. Then they wait again for BTC to come back down. They buy again. They wait for it to go back up at a small time interval. So that is what scalping means. So day trading are mostly traders that work with a more bigger time frame, like a 1 hour, 2 hours time frame. So these guys are looking to take profit on a daily, you know. Then swing traders are people that just buy or hold position for a couple of days, sometimes months, weeks, and at times it takes months. So these are swing traders. They are similar to investors that just buy the commodity or assets and wait for like a year or two till the value appreciates. So I think we'll have to stop here for today. I'm already tired. Please, if you have any questions, you can ask now. If you have any question, you can ask now.
I really appreciate it. Thank you very much, sir.
So this guy said, how do you know if the market has been overbought or oversold? The indicator is on the chart. If it goes above 70, that means the market has been overbought. Then if it goes above 30, that means the market has been oversold. So can you please drop the PDF on? No. This PDF is not for the public use. But I have other PDFs I can drop for you guys. Okay, other questions, please. I'm already having a headache. I want to round up. Question, any question, any question? How does Binance work? Is it like when we have an account there? Yes, you need an account on Binance. Yes. Any other questions, please? Questions. Okay, boss, you have done a great job. Thank you. I hope this continues. Ready to learn. Though we have the group, we can always interact in the group. I will always be around to take questions or anything. But it's very annoying. People take advantage of this. They start dropping links and stuff like that. So I won't tolerate that. The group should just be like an environment for learning, where people share vital information, updates about everything. So time to time we organize classes like this, then we teach each other stuff like that. So if you guys have any questions, you can ask me. I don't know. Is my video working? You can meet group members except the admin. Okay, thank you very much for this, and you are welcome. Please, we would like you to shed more light on stop loss trading. Okay, stop loss trading. Stop loss trading. There's nothing like stop loss trading. There's stop loss order. So stop loss order is like, okay, let me see. Make I talk on like this. Like this guy, I won't buy a car. No, man, no use car. It's a few, but it's more like telling, going to a market, telling somebody that is selling, let me tell you, a bag of rice. Like probably a bag of rice now is, let me say, 10,000 naira. Then you go to a market, you tell the dealer that, please, dealer, if one bag of rice reaches if the price of one bag of rice touches 9,500 naira, please, I would like to buy at the rate of 8,000. So automatically the dealer will secure a bag of rice for you when the price hits 8,000 naira. So that's just a simple way of explaining it. So that was a great one. Thank you. I'm really grateful, and thank you all for attending. Please, I'll be rounding up now. I think if the recording will be available, I'll share it with you guys. Thank you all for attending. So I'll leave the group open for now so that you guys can discuss and share ideas.